Hi, everyone. This is Jason Barak of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He is Kevin Kerr of Kerr Trading and Kerr Commodities, and you've probably seen him interviewed on CNBC, Bloomberg, Fox Business, BBC, and he's traveled all over the world as a resource renegade. So thank you for coming back for a podcast today, Kevin.
Great to be back, Jason. Thanks.
All right, Kevin, first thing I want to get into is the high-frequency trading. Now, when I hear about high-frequency trading mainstream, they talk about how it's creating more and more volatility. I was wondering two things. One is, how has this affected your work in trading? And two, do you think high-frequency trading is the reason for volatility, or do you think it's the endless money spigot the Fed has been supplying Wall Street with?
Well, John, we've definitely seen high-frequency trading ramp up significantly. It's a big portion of the business now. It's certainly had an impact on the matrix of trading. We've seen big changes since 2008 in the way markets are approached, in the way they're traded, and some of these high-frequency trading programs are very suspect as having added a lot of volatility. On your other point, as far as the money supply and the endless printing of money, which I personally think will continue well into 2014. I mean, all this talk of possible tapering of the QE and all this stuff is really just talk. I don't foresee, and I've gone on television talking about this as well, that there's any near-term solution to start tapering this whole program. Janet Yellen coming in as the new Fed chairwoman, is just going to sustain that even longer just because of her past policies and the hands being tied behind the government's back with all this printing that they've done and what it's done to the markets. We've seen an increase in volatility. We've really seen the commodities get smashed in many ways because of it and because of the printing of money. And we've seen a lot of the market get out of whack, both because of the high-frequency trading and because of the reckless printing of currency.
Now, Kevin, you mentioned John just mentioned the volatility here. Do you think the volatility is starting to scare away the retail investor from any and all markets, like the stock market, commodities markets, these things?
I mean, the vol is definitely frightened some investors, but as we've seen from the stock market, I mean, making record highs. I will point out, and I was on Al Jazeera TV last week. We had some interesting charts showing the amount of purchases on margin, what's going on with these markets. We're reaching these highs. People are borrowing more of this cheap money at these low rates to buy into this market. Now, granted, we've had some very good earnings coming out, and there have been, some bright spots in this, but overall, this market is being supported by a lot of cheap money, and that is frightening. The volatility, I think, has spooked away some investors from certain markets, certainly from the commodities, moved them more into equities and ETFs and some other things. But overall, we're still seeing these markets very well invested.
Yeah, and I think what I see, and you mentioned the name of the game on Wall Street, and I think this is a professional's game, is take that leverage, take that cheap credit, and buy assets, cash flow assets, short-term assets, leverage up the trade. A dividend stock that's only paying a 2% dividend yield, right? But if you're levered up 10, 20, 30 times, you can make that return 60, 80, 90% in only a couple months. And I think that's what we're seeing here, and I don't think it's the retail people that are really doing that. I think it's the institutions, the hedge funds, the trend traders, the people, the large Wall Street banks, the people who are backed by the big capital.
Well, you've hit the nail on the head, Jason. You're absolutely right. And while we have seen the small retail investor coming in and borrowing to a certain extent, you're right. We're seeing a lot of institutional money coming in. And we'll see even more of that when this house of cards collapses. Once the punch bowl is taken away eventually. And again, I think, the Fed is not going to make any moves to taper anytime soon or to end this whole chain of pain for the currency. So we're going to see this pattern continue for quite some time until eventually it won't continue. And then as we've seen in the past, when we just can look at the charts, when this money gets dried up, who comes in? The institutional money comes in and buys with cash. They come in to pick up everything on the cheap. And I don't think we're at that point yet, but we're certainly setting up for a significant correction in the equities markets. And I think a lot of the commodities have been undervalued. We do have very little inflation right now, according to this government statistics. But on the wholesale level and in certain areas, we are seeing prices continue to climb and consumers with less and less cash and a very poor job situation. And nothing seems to be improving. We'll get, of course, the jobs numbers again, and we'll take a look at those now that we're starting to get government data again. And it's just not improving at this point.
Yeah, definitely. I definitely see it on the inflation on the wholesale level. The funny thing is, I looked at Whole Foods today, and their earnings didn't hit like other stocks, and I was like, well, you can't hide the food cost like you can others. But I was wondering one other thing about high frequency trading is, do you think this is used to manipulate all markets?
Do I think high frequency trading is used to manipulate markets?
All markets.
I mean, I couldn't speak to that. I don't know if it's used to really manipulate markets, although it's like anything else. It can be abused, and I think in certain cases it's gotten overextended, and as a result has manipulated markets. I don't know if the action is intentional or just a matter of the nature of the beast, but we're seeing too much of this type of trading, and it does add a lot of volatility, and there's no doubt about that. So, yes, in some ways it is manipulating the markets overall, and has really turned them in a different direction, especially in the commodities.
Yeah, and I think this market, the high frequency trading, because they're pulling bids, they're pulling offers, they're creating wash trading with each other. They're the only source of liquidity in the markets. They're pulling bids out. They're they're intentionally front running trades. They're getting all the data ahead of time, and the New York Stock Exchange is complicit because they're paying fees to them. And it's just amazing. It's just, I think the retail investor, for a large extent, especially in the commodity sector, is just completely and totally scared away from it because of the volatility. Because one bad earnings report or one drop in one commodity price, and certain commodity stocks are down, 10, 15, 20% in one day, the average retail investor will not, accumulate their position. We'll try to time the market at once. We'll not, dollar cost average in or something like that, like what a professional would do, accumulate a position even if they're a trader, and that's not happening anymore.
Well, exactly, Jason. And what we've seen is a lot of these markets get away from the basic fundamentals, supply and demand are kind of out the window. A lot of these reports that we get just, basically don't have any meaning because of the high-frequency trading, and the agenda is set by these funds and whoever else is coming in and moving the market. So we've seen a lot of markets that should really, have different pricing mechanisms being adjusted by these high-frequency trading and other programs, rather than based on fundamentals.
And I actually have a question. I saw a documentary, Florida, and it's about how high-frequency trading has put the open mouth call basically out of business. Do you think high-frequency trading is going to be here to stay?
I think, like anything, it'll go through an evolution, and we're not quite seeing it yet, but we are seeing some changes. And while I think it's going to be here to stay with us, just like electronic markets are going to be the staple of commodities trading from now on. I mean, I was just on the trading floor the other day here in Chicago, and it's virtually empty. We've got option market makers. We've got some of the pits that still trade bonds and euro dollars and all that. But the markets are a skeleton of what they used to be. And now everything is electronic. And it's the same with high-frequency trading. It's a new type of trading. It's taken a foothold, and it's probably here to stay with us. It will go through a metamorphosis, though, because the market it'll have to adapt to the markets eventually.
So those traders can put their boxing gloves down and not have to worry about getting in fistfights on the floor now?
Yeah, well, maybe just through the computer, but not on the floor anymore, no.
They can make a new robot video game where the traders punch each other out and they put it on the big screen on the exchange. They can have like super punch out game.
They'll definitely find a way to get to each other, that's for sure. And, a lot of us have been affected by the high-frequency trading. We like to go through the computer and punch a person on the other side once in a while because it is very frustrating, A lot of the things, and I guess I'm an old-timer. I've been trading over 25 years. I mean, I remember when the first computers came down on the floor. That makes me sound really old, but I remember when the first computer showed up on the floor, and everybody thought that was the end of the industry, and, of course, it wasn't. So everything just changes, and as a trader, we have to go with the change. Always have to adjust with the market, and those that don't and can't adapt usually get left behind or lose money.
maybe the new trend, instead of bringing in SEC regulators to work on Wall Street to rig the system, maybe they're going to start bringing in new NSA hackers or something so they can attack traders from the floor and bring back the old fist fights.
I'll tell you, I think I will say this on the record. I think we are headed towards one regulatory body for the financial markets. I mean, we've heard about this in the past. They're going to get rid of the CFTC. They're going to, conjoin with the SEC and make one overall regulatory body. I don't know if it's going to happen or not, but I think we're closer to that than we've ever been. CFTC budget is cut down to next to nothing. But yet they spit out regulations like every week. So, the markets are very, in my opinion, overregulated at this point. And yet for the big fish, and that's more damage that's happened to these markets too, all the corruption we've seen between MF Global and PFG and all these other companies have really damaged the commodity markets, and the commodity players have left because of it. So when and if they'll come back to these markets is a good question.
Yeah, and the large banks are going to be the ones getting the exemptions regardless of the rules, and they can afford to pay all the fines. It's going to be the little guy who gets screwed over the most. The retail investor who might have wanted to buy his first, futures contract or something, or in a pool or something like that. I think
Right.
those guys. Now, let's switch gears here, Kevin. You recently lived for about a year in the London, England area. Talk about your travels all over the world. Do you see a recovery? How is England's economy doing? Is it an economy where only like their financial district is doing well because they're trading lots of pieces of paper back and forth?
Boy, great question, Jason. Yeah, I mean, I have interest everywhere because, of course, you live in Estonia, which is Eastern Europe and very dependent on the EU. And then I was based offices out of London, so I was living there and working from there and commuting back and forth between home in Estonia and London. And let me tell you, the English economy, the UK, I mean, it's so different from when I lived there in the 1980s. I mean, this is a completely different market, completely different melting pot. The economy, you're right, is being buoyed by the financial area, real estate, but overall, as a blueprint for where we're heading here in the U.S. with the socialized medicine and healthcare and everything else, there's serious fiscal problems, not only in the U.K., but all throughout the EU, where after, they've just spent just a fortune. I mean, they're debasing their currency as faster than we have. And so I think it's really telling for what's going to happen here in the U.S. But as far as when I was living, I mean, prices, the inflation, the cost of living there is just outrageous. And I'd say the UK is one of the most expensive places I've been or traveled to in the world. So to me, it's an economy, it's crumbling from the inside out, basically.
Yeah, and it seems to me like they're stuck in stagflation, where they're misallocating trillions, billions, if not trillions, in capital over there in England. They have unemployment problems too. Most of their jobs are in finance. They're not in the real economy. And then you have the price situation, like you said. I've heard stories from people, some of our listeners who live in England, and they talk about how small the portion sizes get and how there's fees for, driving around in traffic. There's
Right.
humongous expenses for owning a parking spot. It's even worse in some areas than New York City, I think. I'm not sure about that, but I've heard rumors about that. So it's just like everything there is just ridiculously expensive.
Yeah, I mean, imagine changing dollars into sterling, converting from the dollar, which is already weak, into the sterling, and then the prices there are just outrageous. So, yeah, I mean, it would make anybody feel poor living there and working there and opening offices. It's not very business-friendly of an environment either. I mean, it's kind of like the U.S. is getting rapidly now. It's very hard to be a small business owner. It's very hard to, in the financial area, to get anything approved. I sit on the board of a Forex company in Estonia, and to get approval in the UK is just a nightmare. So for us to open a branch there, be able to deal with customers, very, very difficult. So, this is what happens when you start to stifle creativity, start to stifle small business. You get stagflation, you get, people out of work. There's a huge minority presence in the UK. A lot of immigrants have come from Eastern Europe, taken a lot of the more labor-intensive jobs, but also been a huge drain on the system as far as housing and
The welfare,
healthcare, et
right?
cetera.
They have a very large welfare program, right? Yeah.
Very large social welfare program. Yeah.
Now, just out of curiosity, since you said you've lived in the UK and everything, do you have any experience of their healthcare system and what's that like? And are we getting...
Well, no. Luckily, personally, I didn't have to tap into it. But I mean, the scary thing, and I say it this way because while it's excellent to have good social programs, the problem in the EU. I'm an EU resident, so I carry an EU card. My children have both passports. My wife is Estonian, but I'm an American, and I have like basically what's a green card in Estonia. Now, I went to the UK, and I'm eligible for health care. I could go to the hospital. I could get housing. I mean, you name it, and I'm not a citizen. I don't pay taxes there, nothing. But the system is so widespread and so inclusive that just in my standing of having an EU residency card, in UK, and it's not like that in most of the EU countries, you can get all these things and probably a hell of a lot more, even money, if you need it, from this system. And it's just a system that is destined for ruin.
So there's a lot more people taking the benefits in than the taxpayers can bear, and then they're making up the difference. It sounds like via wealth confiscation, confiscating people's assets or through inflation.
Exactly, and much higher taxation, fees, raising, and cutting services. I mean, they're cutting services across the board. The healthcare system, the National Health Service, is taxed beyond belief, and basically headed for serious trouble. It just cannot sustain, and the housing system's there too, because socialized housing is just such a huge part of the economy, and with the immigrant population as well, that it's just overburdened, and it's not sustainable. It's not sustainable any more than it would be or will be here. That's the way we're heading.
Yeah, it definitely looks like that. And I wanted to transition to commodities because ever since I've met you in 2010, you've been pretty much known to me as a commodity trader. And I was wondering, what's your take on the commodity market? One, is the bull market over? Or is this the 1976 all over again?
That's a great question. We're in a long-term, as my good friend Jim Rogers likes to say, in a long-term cyclical bull market. And we're going to have these ups and downs. And we had the downturn in 08, 09 with the world markets. We've had it until about now. I think we're starting to see things pick up. We're certainly, we got to focus on China. I don't care what anybody says. I'm watching very closely the natural gas systems there, situation there as far as unleaded gasoline demand and many other things. But overall, we are in a long-term bull market in these commodities. We have a real depression right now. We've seen a lot of money get sucked out of these markets over the last few years. I think many things are underpriced. The world economy is still very, very sluggish. Employment needs to pick up. But for the longer term, and I've been working and talking to you guys for a long time, I think we're in the same mindset that many of these things right now are very undervalued for the long term, whether it be the rare earths, whether it be agriculture, energy, or the precious metals. Those people who realize that, 10 years from now, we will not be at these price levels. 5 years from now, we won't be at these price levels. As the economy and the global economy recovers, the real new reserve currency, and I know this is kind of cliche, is the commodities, especially energy and precious metals. And so, I'm a big believer in these markets. There certainly is downside risk. There certainly can be money made on the downside. But overall, I'm looking for long-term value, especially on the physical side of these markets.
Yeah, and I don't think with the way Janet Yellen has written about some of her policy ideas, even 2 or 3 years from now, I don't think we're going to have some of these same commodity prices in precious metals, oil, and agriculture. I think I'm most bullish on the energy sector, precious metals, and agriculture as my top 3 commodity themes, because I think no matter what, Kevin, people in China, people in India, Brazil, they're going to want to drive their car for the first time. Once they buy their car, they're not going to want to stop driving it or their scooter. And then they're going to want to eat more food and more protein-rich food, and that means more calories.
Yeah, getting back to it, the China story is far from over. We're doing a new report on China and Africa and what's going on down there, China and Russia. The partnerships that are being made, America's just kind of left out in the cold. But, this is for the long term, for these resources, long-term sustainability and the growth in these countries, especially China, with the amount of cars they're putting on the road. I mean, they're the number one car buyers in the world now. And, we're talking millions of units a month. I mean, it's not even fathomable. And yet people talk about slow growth there. Well, okay, but slow is relative, So demand is creeping up.
Exactly. And GM, to add another point to your argument there, Kevin, GM took all the bailout money, right? And not only did they bail out the United Auto Workers, but they also started with a lot of that money building more plants in China. So they see where the future's going.
Isn't that great? I mean, that's the thing is, we are so on the side of the U.S. I mean, being back here in the United States, it's very interesting because when you live abroad or you're traveling abroad, a lot of the reporting is much more objective. And you see a different picture, and meanwhile back here, you can just see the eroding of relationships with other countries, resources. We're not going after the resources we have properly, or
infrastructure is decrepit.
Infrastructure is decrepit. We spent no money on new pipelines or new refineries or anything, and yet we're debating this national health care plan, which obviously execution-wise, it's been a disaster. I mean, to say the least, and yet putting them, everything. I mean, from the beginning, and I don't want to bash on this administration. It's just in general the entire government. It's pathetic, and so we've really set ourselves up for failure in the next decade because we're so far behind, unfortunately. Meanwhile, China builds these relationships. They're building long-term energy relationships with Russia. They're well into Africa. Mining, agriculture, energy, you name it. And they have a strong foothold there, and we have no presence, basically. So it's going to be very, very tough for this country in the next decade.
Yeah, and I got to say, since you brought up the healthcare execution, I'm actually glad the execution has been poor. Imagine if some of those panels actually executed well. So I think that's one of the bright spots of the healthcare bill, if you ask me.
Yeah, I mean, how poorly this – sorry to interrupt you guys. Just to add to that, I think how poorly this has been executed, it's even surprised some of the liberals and progressives who wanted this in the first place.
Yeah, I mean, the frightening thing is if you can't even launch the website and get people signed up, and I think they're saying that they'll be able to do 17,000 people a day once it's actually up and running. I mean, how long is that going to take? And if you can't even do that, how are you going to run a healthcare system for a country this size? It's absolutely absurd. But it's everything, like I said, in the markets, it reflects back on that too. The way that the economy's been handled with just printing more money. The whole idea that we're not someday going to have to pay for this reckless printing of money with a higher inflation is like wishful thinking of a small child. Any of us who are intelligent, I know you two guys are, I know a lot of people I talk with, we all know what's coming. It may not happen today. It may not be, inflation like in the 70s here yet, but eventually, whether it's our children or us in our old age or whatever, someday we're going to have to pay for this. And so the more we kid ourselves, the longer this goes on, the worse it's going to be.
Well, right now, Kevin, the Federal Reserve can export most of that inflation to developing countries via U.S. dollar pegs, and that inflation is also going to Wall Street and D.C., but the inflation is in the asset prices, because you see rare art, wine, fine wine, collectible wine, antiques. The price on those things, for some of them, I've seen stories, they're doubling every 6 to 8 months for art and collectibles and wine. And then you look at the bond market, which stocks, bonds, commodities, those asset classes are not supposed to all be going up at once, and it's just really screwing things up. Because, the real estate market looks like it's being reflated. Obviously, it had a humongous bubble. That thing should have taken many years to work its way through, and the prices are already rebounding a lot quicker than many people expected. So It's just pretty nuts that the inflation right now is just not hitting the developed world yet as much as it is, India and China and things like that.
Yeah, and I think we're probably seeing it lead the way in energy and agriculture, as you pointed out earlier. That's where we're really seeing it in the developing world, and they're going to get hit first. We're going to see it later, but they're going to get hit first, and the repercussions. Eventually, though, the repercussions will hit here. They'll hit the middle class the worst, and we'll just have a huge, even bigger divide than we have now in the financial classes in this country, with basically the middle class being eroded and small business going under.
Well, one thing I wanted to ask you also is, I was actually going to ask it, but when you brought out the poor execution, I had to talk about how I was glad about that. But is natural gas the one thing it doesn't seem like any of the QE's money has gone into is North American natural gas. Japan, since they had Fukushima, their natural gas prices are $16 per thermal unit. Europe, it's around 8, but in North America, it's only 2 or 3.
Right.
And a lot of people are saying that fracking for natural gas will work with oil. So my question is basically two-part. Is if you look at the distortion of natural gas, do you believe that we're going to, with all the export terminals coming on, we're working our way towards one natural gas price? And is there any way that fracking can do for North American oil in price that it does for shale gas, in your opinion?
Let's see. Where do we start with this? Well, I've been a huge advocate for natural gas. I mean, this whole debacle over the years with, corn-based ethanol and these kind of feudal, waste of money programs that are clearly just political and completely flawed, has been a huge boondoggle waste of time and money. And of course, we had this huge, vast, empire of natural gas, and we need infrastructure, clearly. And there's just a huge political wrangling there between the Keystone Pipeline and other things, and they're constantly arguing in Congress and wherever else. But ultimately, this is our best resource. If we can find a way to, improve the delivery systems and really utilize the resources we have in this country, we would solve our energy problem, quite frankly. As far as the pricing goes in natural gas, and we're closely watching the natural gas problems in China because they have real shortages right now. And they're cutting off a lot of the factories to make sure that they're getting that gas to residential areas that are harder to control, shutting off. And so they're having a real problem there. Now, it's not really a solution for us because LNG terminals and shipping the stuff that far doesn't really make financial sense. But, we have this resource at home that would really solve a lot of our problems, and we need to really explore that. And hopefully, this will happen sooner rather than later. As far as fracking goes, there's a lot of arguments on either side of this, and what is the future of it? How extensive is it going to be? Is it a real solution? I mean, according to EIA and others, this is the panacea. I personally fall on the other side of the fence on this. I do not think it's the be-all and end-all answer. I don't think any one thing necessarily is. But as far as fracking goes, there are a lot of problems with it. There's a lot of hurdles it has to get over. And how extensive it goes, I don't know. So I don't know if that answers your question or not, but I hope so.
Oh, it answered it. Yeah, I agree. I don't think it's a panacea, especially with the cost of production. I was looking at a couple days ago. Some of these wells in the Permian Basin are $96 just to break even. Right.
Yeah, there's some real problems in that area as far as costs go. And I think the lower hanging fruit is certainly to beef up our natural gas delivery systems, build more pipelines, build more infrastructure, and find better ways to explore alternatives, and an overall package of energy solutions. As far as natural gas prices, I think you're looking at natural gas prices actually sharply rallying as we get more demand coming online. I mean, whether it's municipal vehicles, we need to have some mandates here. Forget about the ethanol for a minute. We should have national mandates on natural gas vehicles, natural gas systems in place by a certain year. All that stuff should have happened. It just hasn't yet.
But Kevin, the Pickens plan was a somewhat of an attempt to get that, like a compromise between the public and private sector, and the Congress couldn't even agree on that. And the Pickens plan was just, I think, for taxis and buses and the rigs, the guys who drive across the country in the
Right.
big rigs to switch to CNG engines for natural gas. So we can't even get that, and that was the easiest solution to implement. It's just amazing, that all the politicians and the lobbyists and the special interest groups, they're stopping. I think they're the ones that are hurting the economy. The American entrepreneurial spirit is still very strong and intact. If those people, the politicians and the people who hate business and entrepreneurship and stuff like that and capitalism got out of the way.
Well, you're right. You have too many special interests coming in that have their hands in other cookie jars that don't want to see this work. I mean, T. Boone Pickens has been out there on the front lines, pushing for these sensible solutions. And I've met T. Boone before. We've talked, and great guy and very intelligent. Obviously knows this market and these industries inside and out. And we all know how foolish the whole corn-based ethanol approach and putting money into that whole entire industry, waste of time. And so I'm not surprised that, his plans have run into a lot of roadblocks. There's a lot of special interest, certainly from big oil, but from other areas that are just not down with the idea of a natural gas country, which is this is our biggest resource. This is what we have to do. Let's put it that way.
Yeah, exactly, Kevin. And it seems to me like the coal lobby would be the one stopping it, because I think the one fuel, because it would take trillions of dollars in infrastructure to switch our economy, like all the gas stations to CNG and things like that, to natural gas from oil. But I think the one change that I see rapidly occurring now is all the utilities in the United States. They're all switching from coal to natural gas because it's cleaner burning and it's cheaper. So I think the coal is the one where the demand is getting destroyed very rapidly here in the United States, at least.
Yeah, I agree with you. I mean, the coal industry is really taking a 1-2 punch, and while we're still seeing it utilized to some extent, we're seeing it diminish quite rapidly. The real answer, not to beat a dead horse, is really to build more broader pipeline infrastructure, more exploration, and just really use the resources we have that are clean burning, that we have an abundance of, and cut our energy dependence on the Middle East. I mean, now we're facing Saudi Arabia saying they're going to cut political. And, we're constantly dealing with the Middle East, constantly having to worry about the energy supplies here. And we have this resource at home that if we exploit it over the next 10 to 20 years, we'll have plenty of supply. So it's just a matter of just out of the way. And
yeah, that's a good point, Kevin. Now, I have one more question before we wrap up the interview. And you're one of the world's best experts on the soft commodities. Are we close? If we see an increase in food prices in wheat and corn, are we going to see another Arab Spring type of event in the Middle East or one of those other countries where their salaries make up only 70% of their salaries or more make up their food bill and their energy bill? Are we going to see one of those in the future?
Well, that's a great way to end the interview, Jason. This is one of my biggest concerns heading into next summer. Food prices are climbing and climbing fast. I mean, staple foods, the UN, we're looking at the numbers coming out of there, very frightening. And like you said earlier when we were talking, the developing nations of the world that depend on cereal, on other grains as a staple food, they've seen these prices skyrocket. And so, yes, I think that many countries in the world are going to be facing more of these kind of civil disobedience and riots because, people will put up with a lot. They'll put up with higher energy costs, or they'll find an alternative when it's something else, or they won't buy some gold if it's too high, or they can avoid that if they want to, but you can't avoid eating. You got to have something to eat. And so what will drive most people to riot and will drive them to civil disobedience and overthrowing governments is when they can't feed their family and they can't feed themselves. So to me, this is one of the biggest crises we face in 2014 are these higher food costs and input costs for this food to create it. Fertilizer, you name it, anything that goes into inputs to make these soft commodities is going up as well. That increased cost for farmers, they pass it on to us, and it shows up in the supermarkets, with just exponentially higher prices on the world stage, as well as here at home domestically.
And to follow up on that, Kevin, aren't the stockpiles, the above-ground supplies for a lot of these key soft commodities that are used as food, some of them are at historically low levels, right?
That's true, and yet we haven't seen it reflected in the prices, which comes back to some of the market manipulation we've been talking about and depressed prices for other factors rather than fundamentals. One of the markets we follow closely that it's been kind of very interesting to follow is coffee. Prices for coffee are extremely low, and other commodities. A lot of the grain markets as well. So we're going to have to keep a close eye on it. And inflation is still pretty much in check, like you said, here in the U.S. We haven't seen exorbitant prices yet, but on the world stage, we're going to see that first. And I think we're facing that as we print more money and as we see the economy is still struggling. We're going to see these prices ratchet up too.
Sounds like a good time to buy a farm.
Sure does.
Okay, well, in wrapping up the interview, Kevin, I just want to thank you very much for your time, and can you please tell our listeners more about your website and the products and services you can offer them?
Sure. We're located in Chicago, Illinois, right in the Chicago Board of Trade building. People can stop by and visit us and learn about our newsletters and other research that we do at KerrCommoditiesWatch.com or KerrTrade.com. That's KerrTrade.com. Thanks, Jason.
Thank you, Kevin, and hopefully we'll have you back on soon.
Appreciate it.